Time now for a look at the day's top business news with Brian Quinn. Hi, Brian.
Hey, Karis.
You're starting in the US, where the central bank has cut its growth projections for the year as Donald Trump's policies start to hit the economy.
Indeed, the U.S. Federal Reserve has released its latest interest rate decision on Wednesday, choosing to hold its benchmark lending rate steady for the second time in a row at 4.25% to 4.5%. Officials signaling 2 rate cuts likely to come over the course of the year. That call had been widely expected. Fed Chair Jerome Powell, though, warning that policymakers are expecting higher inflation and slowing growth as a result of the policies of the Trump administration. Inflation projections raised from 2.5% up to 2.7% for the year. That's the highest level since late 2022. Growth forecast, meanwhile, lowered from 2.1% in December down to 1.7% for the year now. Powell citing Trump's tariffs as part of that rising inflation, along with major changes in immigration, regulation, and fiscal policies, leading to rising uncertainty in the economic outlook. Economists have been sounding the alarm that Trump's policies risk sending the U.S. economy into recession, with consumer sentiment on the decline. Here's Powell.
We understand that sentiment is quite negative at this time, and that probably has to do with turmoil at the beginning of an administration that's making big changes in areas of policy, and that's probably part of it. I do think the underlying unhappiness people have about the economy, though, is more about the price level.
Next, a major blow for environment group Greenpeace in the US as a lawsuit verdict threatens to bankrupt the organization.
Yes, Greenpeace has been ordered to pay $660 million to Texas-based pipeline firm Energy Transfer. A jury in North Dakota awarded those massive damages as the result of a lawsuit brought by Energy Transfer over Greenpeace's role in protests of the controversial Dakota Access Pipeline. Nearly a decade ago, demonstrators flocked to the Standing Rock Reservation of the Native American Sioux tribe to try and block the construction of a pipeline that crosses the tribe's sacred lands and risked polluting its water supply. Incidents of vandalism and violence did break out, along with episodes of police brutality. Energy Transfer accused Greenpeace of trespassing, defamation, and conspiracy against it. Greenpeace says it played only a minor role in supporting the protests and that the damages could bankrupt its U.S. operations, and also says the lawsuit is aimed at silencing critics of big oil. Here's Greenpeace USA's interim executive director.
Our quest will continue through appeals and beyond. And this is not just about environmental and climate groups. It is about the ability of every association, every individual to participate freely in democracy, in the public sphere, and to be able to exercise our freedoms of speech, expression, assembly, and association.
Let's check in on the day's trading action. How are the markets shaping up?
So while the U.S.'s overall economic outlook might be darkening, those projections for 2 rate cuts this year did help to push Wall Street higher on Wednesday. A mixed picture for Asian indexes on Thursday, though. China's central bank is also deciding to hold rates steady at its latest policy meeting as Trump's tariffs threaten to send the yuan lower. Beijing trying to stabilize its currency while also stimulating the economy. Shanghai down nearly 0.5%. Hong Kong's off by around 1.8%. Tokyo's exchanges closed for a holiday on Thursday.
And finally, for business, Ben & Jerry's ice cream may be sweet, but the company's relationship with its corporate parent has soured.
It has indeed. Ben & Jerry's has filed a lawsuit in New York against Unilever, accusing the global consumer goods giant of firing its chief executive over his political activism. Back in 2000, Unilever acquired the Vermont-born ice cream company, which has long been known for its advocacy on social and environmental issues. The lawsuit is just the latest in an escalating battle over its independence. Luke Schrager reports.
For Ben & Jerry's, political and social activism has long been a part of the ice cream maker's very DNA. But according to a suit updated at a US federal court, it's the very reason for the ousting of its CEO by parent company Unilever.
Unilever has repeatedly threatened Ben & Jerry's personnel, including CEO David Stever, should they fail to comply with Unilever's efforts to silence the social mission. Unilever's suppression of Ben & Jerry's social mission has reached startling new levels of oppressiveness.
Ben & Jerry's is often outspoken over issues like black and LGBTQ+ rights, the war in Gaza, and Palestinian refugees, among others. Unilever, one of the world's largest consumer goods conglomerates, acquired Ben & Jerry's in 2000, with the ice cream maker allowed to maintain an independent board and so continue its social activism. But the relationship soured 4 years ago after it said it would no longer sell ice cream in Israel or the West Bank. Unilever sold its Israeli business to a local firm that would continue sales under its Hebrew and Arabic name. Ever since, the situation has only degenerated, with a suit filed last year against Unilever alleging it tried to dismantle the independent board and keep Ben & Jerry's from speaking out on controversial issues. Unilever, for its part, has already announced plans to spin off its ice cream making companies, something that's expected to be complete by the end of the year.
So a clash of corporate values there, or perhaps a clash of having values versus caring only about profits.
Thank you very much for that business update. Brian, that